So a couple of days ago, I seen a comment in the Telegram group chat, a trading Telegram group chat that I'm in, and it's just basically a trader who was dealing with confusion in this trade, and he just didn't know what his strategy was. He didn't really understand. Let's really be precise. He didn't really know what his trading plan was. And I sent a message, and that's what this video is going to be on topic today. But I sent a message that I hope kind of helped him. And I think actually a lot of other traders are going through the situation that he's going through, where we just don't really know what our trading plan is. Like we hear a lot about we got to have a trading plan, but like, what do we really need in our trading plan? Like, what do we need to know? So in this video, I'm going to go over 5 questions that you need to have answered before you even take your next trade. Let's go ahead and jump into it. So the first question, and I've written all this down right here because I went through the exercise myself, right? Oh my God, my Legos, no, I'm playing. I went through the exercise myself, as you can see, and I really wanted to really get a full understanding of everything that I'm saying before I tell everyone. So the first things first, the first question that we have to ask ourselves is, what is your trade criteria, right? How does your brain perceive a market opportunity? Now, when going through this question, what is a trade criteria? Now, a trade criteria is it's how your brain perceives an opportunity in the market. So I'm going to give a couple examples to go by. For example, let's start with mine. So my trade criteria is 2 things, and you can look at this as your confluences, but this is just basically where you go into the charts and you look for a setup. What are the things that qualify as a setup for you? So it may be more than 2 things, it may be 3 or 4, but you really should go defining this. When I say what my trade criteria is, if I'm trading the 2022 mentorship model from ICT, and I use that example a lot, my trade criteria would be a swing on liquidity and then a market structure shift. When doing this exercise, I noticed that that's exactly what my trade criteria was, even though I trade a whole different strategy. It was easier for me to use those terms because it was easier for me to understand what those things were because I studied it a lot, right? So when it comes to trade criteria, really ask yourself, what are the 2 or a few things that I'm looking for in order to identify a setup? If you trade support and resistance, what classifies as support and resistance? Like, what makes a support and resistance zone for me? Those are the things that you add, and I'd say really get in depth here when adding what is your trade criteria. Now, completely exclude anything with the entry because that's what the second question answers. Just focus on figuring out what defines a setup to you and have it clearly written out. For me, it's simple. I like a market structure area that's isolated from previous structure. What that basically means is I like something more of like a liquidity raid move, right? Because it makes it clear on the eyes for me to see my FIP setups. And then the second thing that I look for is I look for some sort of market structure shift, change of character, break of structure, whatever you want to call it. I look for that as my second confluence. Those 2 things are my trade criteria. So like I said again, I want to ask you this question. What is your trade criteria? Write it down, get really detailed about this, because the more thinking you do in this process, the less thinking you have to do when you're live trading, and you can just instantly look at your checklist and you can instantly figure out what exactly you're looking for, and it can eliminate a lot of confusion. So the second question is, what is your entry criteria? What do you need to see in order for you to say, okay, I'm going to enter the trade now? An example of an entry criteria would be, okay, maybe I'm looking for a retracement to a certain zone, right? A PDRA zone, a support and resistance zone, a Fibonacci zone, whatever you trade, right? I'm looking for a retracement to a certain area. And then if you do add candle confirmation, maybe you're looking for a rejection of the zone or a certain candlestick to form, whatever it is. Add these things into your entry criteria. Make sure you have this question entered in detail, because you need to, when you're trading, be able to look back on this, right? And see, okay, cool. I have my trade criteria, but I'm waiting for my entry criteria before I enter the trade. And this will help you build more discipline, eliminate confusion, like I said earlier, and help you take higher quality setups. Now, before I get into the third question, I want to add a little bonus question here too as well. Also ask yourself, what invalidates my setup? This is really good to know as well. And like I said earlier, I'm gonna keep saying this throughout the video. You want to do all the thinking here so you don't have to do any thinking when it's time to trade, right? What invalidates my setup, right? If I get a setup, what invalidates it, right? What makes the setup no longer a valid setup? Write all of these things out in deep confluence. Like, let's say, for example, like going back again to the 2022 model, right? Let's say you trade the 2022 model, right? And you get the trade criteria, swing on liquidity, and then a market structure shift. And then you get your entry criteria, right? But there's no zone. If there's no PDRA, there's no fair value gap, order block, OTE. Let's say there's none of those available. Then does that invalidate your setup, or do you look for something else? Make sure you get really detailed here, because the more detail you get here, the less time you have to spend on the charts trying to figure this out. Getting into the third question, and this question, I got 3 stages for it that I want to look at. But the third question is, what is your risk management plan? When I say risk management plan, I want you to look at it on 3 levels: the macro, monthly time frame, daily, right? And then per trade. When it comes to what's your risk management plan, this is big, because I notice a lot of traders have struggles with, putting on different lot sizes and not knowing what to risk per trade and risking different amounts per trade. One trade they may lose $500, next trade they may lose $50, and it's totally different. And then you look at your averages and they're all like not consistent. This is key to know how much you're risking before you even enter your next trade, and it's a really good thing to have. So let's say, for example, let's start with the macro, right? The monthly. When I mean, what is your risk management plan for the monthly? Do you have monthly drawdowns? Let's say, for example, I know most people have monthly targets, but do you have a monthly drawdown as well? What these things are not just like limiters, but they're areas where you can know that you should stop trading. All these things, like I'm saying again, and I'm gonna keep saying it, is really to plan everything in advance of your next trade. So have a monthly drawdown, and then have a monthly goal too, so it can eliminate over trading. Now, coming back down to the daily, right? What is your daily risk management, right? First things first, how many trades are you taking per day? Or how many trades are you allowing yourself to take per day? You don't have to take this amount every single day, but how many are you allowing? Like, again, this also stops over trading. Another thing too, how much are you risking per trade? So going back to the daily example, right? A daily example may be I'm only risking 2% per day. Per trade example may be I'm only risking 1% per trade. So then that means you know that you may get 2 opportunities at max for the day. And then after those 2 opportunities, you have to stop trading. This helps you not only practice good risk management, but it also helps you look for higher quality trades. For right now, just figure out what are these 3 things. What is my monthly limiters, right? So when I'm in profit, where do I stop? When I'm in drawdown, where do I stop? For the monthly time frame. And then for the daily, you could do the exact same thing. When I'm in drawdown, where do I stop? When I'm in profit for the day, when do I stop? Have these things planned out. And then for your per trade basis, know how much you're risking per setup opportunity. And have all those things planned out before you enter your next trade. Now, the 4th question is, what is our trading window? Now, when I mean what is our trading window, trading session, how long do you usually trade for? It is key that you figure out and know what is your trading window. Now, this may be a simple answer. You may be trading all day. You may have a simple window from 9:33 to 9:47. Whatever it is, you may have a session window. But whatever it is, make sure you have this written out, so you know that if you are trading outside of this window, you are breaking your trading plan. So the 5th question is, how do I manage my trades? And by far, this is the most important question that you're gonna have to spend the most time on thinking. And there's a lot of sub questions in this category. So the first one is, where am I placing my take profit? Second, where am I placing my SLs, right? Where am I placing my stop losses? Do I even have stop losses? Make sure you are writing all this out. And then third, how am I managing my trade? So when I mean managing your trade, there's multiple approaches to trades, right? And one of the biggest problems traders have as well too, and I've dealt with it multiple times, and I know this just from talking to a lot of traders, is just not being able to hold their trades. So imagine you have a rule that you have to stick to that is in detail of showing you, okay, cool, I can only close my trade at this area or this area, right? I can only close it at my take profit or my SL. That's called a set and forget approach, right? Where you take the trade, you place your SL, you place your TP, and then you wait for the market to hit either one of those zones, right? And it's by far one of the most recommended way of managing your trades, especially if you're a beginner. Simply reason why, because it builds discipline and it also helps you get over that fear of losing profits. You're going to go through it a lot. You know, when you back test these 5 questions and you go through it a lot, you're going to experience a lot of trades where it partially goes to your TP and hits your SL, and it partially goes to your SL and hits your TP. You're going to experience these things, and you're going to start building more strength and confidence in letting your trades do what it do, as I say, right? So that's one way. If you're taking partials, right? If your strategy has a system where you take partials at certain areas, make sure you're writing this down too. If your strategy has, well, I don't take partials, but I move my SL to certain areas when it reaches certain areas in my trade, write this down as well. And you're writing all of this down. Now, the main reason why you're writing these questions down and thinking about it is so you can internalize it. That's the first reason. You can internalize with this, right? So you can start to understand why you do certain things of your strategy. And it's okay if you don't have some of these questions answered. You know where to work on. When I first started writing this, I did not know what the answer to my 5th question was. I didn't know how I was going to manage my trades. And I had to learn through repetition and experience and going through the data, back testing and seeing what works for me, looking at the data, trying something new and back testing it again, and then taking another look at the data, right? But when you're doing this, just make sure when you're writing these questions out, make sure to take the time to really go into detail and do all the thinking in the notebook. So when it's starting to trade, when it's time for you to trade, you don't have to think about these things. You can just act on your trading plan. And that is how you build a solid trading plan. That is what a trading plan is. A trading plan eliminates all the thinking for you. So all you have to do is execute on it. That's why when you hear stick to your trading plan, that's what they mean, because your trading plan should have everything in detail of how you need to act in certain situations. That's the best thing about it. Now, I know there's loads of things I may have left out, but I just viewed these 5 questions as the most important things. And if there's other things that you feel like you need to add into your trading plan, add it as well. But take the time to figure out everything and do all the thinking in advance so you don't have to do the thinking while you're trading. And now all that energy that you was spent on how do I enter the trade, where should I place my SL, all that energy is gone, and you can use that energy to focus on the things that actually matter. How am I managing this trade right now? How am I doing emotionally right now? Do I feel anxious? Why do I feel anxious? And then your psychology can become better because now you're becoming more self-aware while you're trading. I hope this video helps someone. I tried to make it as short as possible, but those are the 5 questions that I took the time to write out in my trading plan and figure out what strategy works best for me. And I hope it works best for someone else too. And until next time, peace.